Hi, folks. I trust all you are doing well. So, in previous lecture, we have started a new case that is startup valuation, and we have understood the basics of startup valuation, where we have seen that Comtech is a company who manufactures laptops and computers. Now, they want to raise money from the investors, and for that purpose, they want to find out the valuation of business, and you have to help that company in preparation of financial model. So we have read the assumptions related to this company, and after that, we have done forecasting for sales and collection. So we have seen that how, with the help of assumptions, we have forecasted the sales. We have calculated that how much cash company will collect during the year, and also we have learned that how you can find out the value of data with the help of information which is given related to operating cycle. So we have also discussed about the operating cycle. We have seen what is operating cycle. We have discussed about the inventory days, raw material days, and also we have discussed about debtor and creditor days. And today's lecture, what I will do, I will discuss about the costs, right? I will do detailed discussion about the costs and inventory and purchase. So you will be getting more idea. But before I proceed, I would like to give you the idea related to the debtor, how we have calculated the debtor value. So you will be able to connect the coming concept in detail. So we have seen that the total sales of company which we have calculated was 1 crore, 1 crore 15 lakh, and this is how we found the value of sales, right? We have taken unit sales and we have multiplied this price and we have calculated the sales value. Then in assumption sheet, it was given that out of total sales, the cash sales proportion is 60% and credit sales proportion is 40%. So this we have seen in the assumption, and accordingly, we have taken 60% of total sales as the cash sales and 40% of total sales as the credit sales. Then what we have done, we have calculated the cash collection budget, where we have considered the cash sales, and after that, we have also calculated the cash collected from credit sales, right? We have also calculated the cash collected from the credit sales, right? So these all things what we have done, we have calculated in detail. Now we have also understood that how we can find out the debtor value. So I will take a small example to make you understand this. So you will be getting more idea here. Let's see how we can calculate the debtor value from given information. So let's suppose company has performed credit sales of 36 lakh during the year. Right. I won't take the information which is given in the question or case. Here I will take my own assumption. Here in this case, if you see the credit sales is of 40 lakh, but intentionally I will take 36 lakh, so you will be able to connect more. Now here credit sales is of 36 lakh during the year. Now in assumption sheet, if you see, they have given information related to days receivable. Okay, they have given information related to days receivable, which is 45 days. Right. So here information related to days receivable is given, which is 45 days here. So here credit sales is of 36 lakh. We can see credit sales is of 36 lakh here. And if I calculate the days uh, receivable or receivable days. So days receivable is given, which is 45 days, right? Which is 45 days and days in a year, right? If I write down days in a year, so that is 360 days. So it means in 360 days, what company has done, company has sold goods of 36 lakh in credit, right? Company has sold 36 lakh credit, goods on credit. Now, if here that days receivable are given, which is 45 days, it means that company provides credit for 45 days, and this amount company will receive in coming year, right? So here, if I want to find out the debtor balance, so we have already discussed this thing. So what I will do if I want to find out the debtor balance, so here I will take credit sales amount, right? And I will multiply this with days receivable. I will multiply this with days receivable and I will divide this value with 360, right? I will divide this value with 360. So here you can see credit sales is given 26 lakh. We can multiply this with 45 and we can divide this with 360 here. So here we will be able to calculate the amount of debtor, right? Here we will be able to compute the value of debtor, that is 4 lakh 50,000. How come we have calculated 4 lakh 50,000 here? Because company has performed sales in 360 days, that is 36 lakh, right? And the average debtor which are outstanding is 4,50,000. On the basis of debtor days, we have calculated a debtor balance, right? And this is how we calculate the debtor balance, creditor balance, or inventory balance, right? Practically. So now, if I want to find out the value of costs, so here what I will do, I will use the assumption. Now, if you see in assumption sheet, information is given related to the COGS. So monitor screen information is given here, then monitor casing information is given, and then assembly labor information is given, right? Here you can see monitor screen cost per unit is given, that is $75, $72, $65, and $60. Then monitor casing cost is given, that is cost per unit, which is 75, 72, 65, and $60. Assembly labor cost is given, which is 50, 50, 48, and $45. Then here you can see total cost is 200, 194, 178, and $165. Right? This is the information given here. So now if I want to compute the total cost, right? If I want to compute the total cost related to COGS. So what I will do here, I will take total units and I will multiply this with cost per unit, right? So if I want to calculate here the monitor cost for year 2024, I will take 10,000 and I will multiply this with $75. So that is going to be 7,50,000. Again, here I can take second data, that is monitor casing. So $75 into 10,000, you will get the cost for monitor casing. If you want to calculate the assembly labor cost, you will take cost per unit and you will multiply this with 10,000. So this is how we can calculate the values, right? And if I will drag this value, so we will get the cost for all the years, right? We will get the cost for all the years. Here you can see automatically the sales will change and we will get the cost for all the years, right? But here in Excel, what we do, we link everything. So here, if I want to calculate the COGS cost, so here I will link the values. So first value which I have to take here is unit sales, right? First value from assumption sheet which I have to take is unit sales. So in first year, company has sold 10,000 units. So I will multiply this with 75, right? I will multiply this with 75. But now you have to see here that this 10,000 should be common for each line item, right? This 10,000 units should be common for monitor screen, it should be common for monitor casing, and it should be common for assembly labor, right? It should be common for assembly labor. I think you understood, right? This should be common for assembly labor here, right? So now what we have to do here, we have to freeze this particular row. We have to freeze this particular row. So what I will do here, I will freeze the row number 5. I will freeze the row number 5 because this should be common. Why I'm not freezing this whole B5 cell? Because when you will calculate the COGS for next year, right? So here the column will change, right? New column will be C5, right? Instead of B5, new column will be C5. When you will calculate the COGS for year 2026, here column will change and new column will be D5. So that's the reason here we do not have to freeze B5. We do not have to freeze the whole cell. We have to freeze only row here. That's the reason what you will do, you will put dollar before 5, right? So here what I've done, I have put it dollar before 5 and I have selected this value and I will press here control enter. So I'm able to calculate the COGS for each year. Again, I will repeat this step for you, so you will be getting more idea. Here, if you want to, put the values by a single click, you just select all the cells where you want to feed the values. Then press equal to, then go to the assumption sheet, right? Here you have to select 10,000, then multiply this 10,000 with monitor screen cost, right? And here you have to freeze this row number 5. So you have to put dollar before 5 here, and we can press Control Enter. So we will be able to get the cost for each line item, and then we can press here. Then we can do the total here. So let's do the total. So here total cost of goods sold is 20 lakh. It means company spends 20 lakh dollar on the manufacturing of goods, right? For the manufacturing of goods or whatever direct expenses company incur. Then now we have calculated here the COGS. Now we can jump to the next calculation, that is inventory and purchase. Now here in inventory and purchase sheet, what we have to do, we have to find out the purchase amount. Right? What we have to do here, we have to find out the purchase amount. That what amount of raw material company will buy during the year. or what amount of inventory company will buy during the year. Now, if I ask you that what is the formula for COGS? We have calculated right now COGS. So what is the formula for COGS calculation? This we have already discussed in our financial reporting module. So if I want to find out the COGS here, so simple formula is going to be opening stock plus purchase plus minus closing stock. This is the formula, right, to calculate costs. Now, here in question, in this case, we have already calculated the cost. And now we want to find out the purchase. So if I twist this formula, so is it possible for us to find out the value of purchase? Yeah, definitely we can find out the value of purchase by twisting this formula. So what I will do here, I will twist this formula. Now, new formula which we will get to calculate the purchase value, it is going to be closing stock plus COGS minus opening stock. This is going to be the formula, right? This is going to be the formula. Now, if I do the sum of closing stock and COGS, right? If I do the sum of closing stock and COGS here, right? So the total of closing stock and COGS is going to be your total inventory needed. That what amount of inventory you require in the business. This is going to be the amount of total inventory needed. Total inventory needed. Right? This is going to be the amount of total inventory needed. So once you will do the total of closing stock and COGS, here you will be able to find out the amount of total inventory needed. Right. Now from total inventory needed, once you will subtract the opening stock, right? From total inventory needed, once you will subtract the amount of opening stock, right? Here you will be able to find out the purchase of inventory, right? Or the amount of inventory which you will buy during the year, right? So here you will be able to find out the purchase of inventory. I think you understood, right? So if you want to calculate the purchase of inventory, so you have to take total inventory needed and you have to subtract the opening stock. So same steps we have to perform here. Now we know the cost of goods sold. We have already calculated the amount of cost of goods sold. So I will bring this value here. So we have calculated the cost of goods sold. Now we have to find out the desired inventory. What is going to be the closing inventory value here? So I have already written the formula, but still I would like to discuss this concept in detail. Now in assumption sheet, if you see here, days inventory is given, which is 60 days, right? Days inventory is given, which is 60 days, and days payable is given, which is 90 days. Now, what is the meaning of days inventory here, right? Listen to me very carefully. What is the meaning of days inventory here? Here, let's suppose what company has done during the year, company has manufactured goods of, let's say, 72 lakh. Company has manufactured goods of 72 lakh, right? Or company has performed sales of 72 lakh, whatever you want to assume, you can assume, right? A company has manufactured goods of 72 lakh, right? Cost of goods sold of company is 72 lakh. Now, here, inventory days are given. Inventory days are given. What is the meaning of inventory days? Inventory days means that how much time company takes to convert their raw material into finished goods. So here it is given 60 days. It means that company requires 60 days to convert their raw material into finished goods. So their manufacturing time is 60 days, right? It means the funds of company get blocked for 60 days, right? The funds of company get blocked for 60 days, right? In inventory, company blocks the total inventory blockage period is 60 days here. So now here, if company wants to maintain closing stock, right? If company wants to maintain closing stock, how much closing stock company will keep with them? This is the question which you should ask from yourself. The blockage is of 60 days. So obviously what you will do, you will keep 60 days additional inventory with you, right? So there should be no shortage of inventory during your manufacturing process. If there will be shortage of inventory during your manufacturing process, so obviously you won't be able to fulfill the requirement of customers, right? You won't be able to fulfill the demand. So here, if I want to calculate the closing stock value or desired closing stock value, that how much inventory company wants to keep with them, right? So here, simply what I will do, I will take the same formula which we have already discussed. So in a year, there are 360 days. Right? We know in a year, there are 360 days. And if I want to find out the closing stock value, so what I will do here, I will take COGS, right? Then I will multiply this with 60. So this is going to be the inventory days, right? This is the inventory days here. And we will divide this with 360. So here we will be able to calculate the amount of inventory which is required, right? The amount of inventory which is required to maintain the closing stock requirement, right? To keep or to fulfill the requirement of closing stock. So here what we will do, we will use the same formula, COGS into 60 divided by 360 we have to do. So here it is going to be COGS, that is 20 lakh, and we can multiply COGS with 60. So here we will link this value with this assumption, that is 60 days, and we will divide this with 360 days, right? So let's press Control Enter. So we will be able to find out the desired ending inventory requirement. Now here, what I will do the total of inventory needed. So the inventory needed is going to be the sum of closing stock and COGS here. So let's do the sum of closing stock and COGS, and this amount of inventory is required here. Now, if I talk about purchase budget, so we have calculated the inventory needed. Now, if I want to calculate the purchase, so we have seen the formula, it is going to be closing stock plus COGS minus opening stock. So closing stock plus COGS is going to be your total inventory needed. And if I want to calculate the purchase amount, so it is going to be total inventory needed minus opening stock. So here you can see total inventory needed is given, right? And we have to subtract this with the beginning inventory, right? So here we already know the beginning inventory. How we know the beginning inventory? We know this, that closing stock becomes the opening stock for subsequent year, right? So here the previous year closing stock, which is $333,333, will become the opening stock. And I will drag this figure here, right? I will drag this value here. So we will be able to find out the opening stock, right? And obviously, for first year, there will be no opening stock, so here value is going to be 0. So if I want to find out the purchase amount, so what is going to be the formula? Total inventory needed minus beginning inventory. So this is going to be the purchase value. So here we have calculated the amount of purchase during the year. Now, what we have to do, we have to find out the creditor balance, and also we have to find out the disbursement balance, right? That how much amount we will pay for the purchase, right? How much amount we will pay for the purchase here. So here we have to find out the payment of payables. But before I calculate the payment of payables, first we need to find out the creditor balance. Now, if I want to find out the creditor balance, so here in assumption sheet, if you see, creditor days is given 90 days. It means your creditor provides you credit of 90 days. So if you buy inventory today, right? If you buy inventory today, when you will make the payment to your supplier, you will make the payment to your supplier after 90 days. So you receive, you know, gap of 90 days, right? You receive gap of 90 days. So here, if I want to calculate the value of creditor, so what is going to be the formula for calculation of value of creditor? Same formula. The formula is going to be here, the credit purchase. Now, nothing is given related to the purchase. So we'll assume that 100% purchase is done on credit basis. This is the assumption given here, that 100% purchase is done on credit basis. So here, what is going to be the formula here? It is going to be credit purchase multiply with the creditor days or payable days, right? Payable days, and we will divide this with 360 days. We will divide this with 360 days, right? So here, if I want to calculate the account payable amount, right? So what I will do here, I will take the purchase amount, that is credit purchase, then we will multiply this with 90, right? So let's multiply this with 90 here. So in assumption sheet, days payable is given, and we will divide this whole value with 360, right? And then we will press here Control Enter. So here we will be able to find out the addition to the account payable amount, right? This much addition company will do in the account payable amount. So here we have calculated the addition. Now here, if you see the opening balance for first year is obviously going to be 0. Then subtraction from account payable. So this year you won't make any payment. Again, it is going to be 0. So if I want to find out the ending balance here, right? So what I will do, I will take the total of all three values. So let's do the total here. So you will be able to calculate the ending balance here, right? You will be able to compute the ending balance here. Now, once you have calculated the ending balance, so what you can do, you can bring this ending balance here, because this will become the opening balance, right? This will become the opening balance here, right? So here, this is the opening balance. Now you got 90 days credit from your supplier. So in first year, if you have purchased goods on credit and whose value is 583,000, these are the closing creditor of your business, right? These are your closing creditor for your business. So you have to make the payment in 90 days. So what you will do, you will perform this payment, right? You will perform this payment, which is 583,333, right? So here you will make this payment. So opening balance is 583,000, and this payment you will perform in this year. So closing balance is going to be same, which is the addition to the account payable. And this step you have to perform every time. So we can drag this value, right, in subsequent years, and we can drag this also here, right? So we will be able to find out the closing creditor value. Now, if I want to find out the payment which is going to be made during the year, so here the total purchase which you have made during the year is 23 lakh 33,000. So you have purchased goods on credit, that is 23 lakh 33,000. Now, out of this amount, right, out of this total credit purchase, the outstanding creditor at the end of the year were 583,000. Right, outstanding balance was 583,000. So if you have not paid this much amount, it means you have paid the balance amount, right? So total purchases of 23 lakh 33,000, right? And from this, what you will do, you will subtract 5 lakh 83,000, right? It means that you have not paid this much. It means you have paid the balance amount, which is 17 lakh 50,000, right? Which means 17 lakh 50,000 you have paid in the current year, right? Now, if I talk about this year, so you have purchased goods of this value, right? You have purchased goods of this value. Now, here, how much you will pay? How much you will pay here? Acha, here in first year, we have to understand. No, yeah, we have paid this much, which is 23 lakh 33,000 was the total purchase, and this was the closing balance. Okay, perfectly fine. Now, here, if you see, you have purchased goods of 23 lakh 82,000, right? What you have done, you have purchased goods of 23 lakh 82,000. Here, this is the total credit purchase, and the outstanding balance is how much here? Outstanding balance is 5 lakh 95,000. Right? Outstanding balance is 5 lakh 95,000. It means from total credit purchase, paid, you have not paid, that is 5 lakh 95,000. So we will subtract this value and the previous year outstanding balance, right, which you have paid in this year, right, which you have paid in this year. What do you have to do? This amount we have to add here, right? This amount we have to add here because you will pay this amount in this year. So I will take here minus because here the value is in negative. So I will take minus, so it should become positive, right? And I will press enter here. So during this year, how much you will pay? You will pay 23 lakh 70,000. Why I have taken 23 lakh 70,000? Because total credit purchase is of 23 lakh 82,000. From this total credit purchase, you have not paid 595,000, right? And but you have paid for the past year outstanding creditors, that is 583,000. So I have applied the same formula. Total credit purchase minus the amount which you have not paid, right? Plus the amount which you have paid for previous year. So here this is going to be the balance. And we can drag this values here. So you will be able to get the amount of total payable. And we can now press Control Enter. So this much amount, what you will do, you will pay during the year. So I think you understood, right? Now, remaining concepts, what we will do, we will discuss in next video. So my suggestion is go and revise everything. You will be getting more and more clarity about it. Thank you.